So I think there's a little bit of caution here on a shorter term basis. The idea of a commodity touching the launch point does take place.
The Morgan Report with David Morgan. Discover how to build and protect your wealth at The Morgan Report.
David Morgan of themorganreport.com. Well, this weekly perspective, I'm going to do something a little different. They're not always the same, as you well know. So we're looking at about a 5-year chart or so of gold on a weekly basis, continuous contract. So first thing I want to point out is this big bowl, and then we broke through. Now, a cup and handle is the most powerful formation, and this is a cup, and there's not always a handle to it. You could argue that it ended here. There was a down handle, and it popped there. So you could make that. Not a handle that goes from left to right, downward sloping is the most powerful. So we can make that argument. The point is that we hit this 2100 level once, twice, 3 times. You can see here 4, and we didn't break here till the 5th try. And from that time, which is roughly in March of 2024, gold has basically gone parabolic, and now we're bouncing off. So in my private work for our premium service, I talked about gold peaking. And so far, it looks as if I am correct. So we also can look here from a longer term perspective of how many times gold hit the 200-day moving average and how many times it hit the 50-day moving average. And you can see it did it a few times, but it hasn't gotten close to either one here, basically from the time that it broke out, and slightly before that time, as you can see. So I think there's a little bit of caution here on a shorter term basis. The idea of a commodity touching the launch point does take place, which would mean a complete retracement down to this blue line, this 2100 area. That would be a complete retracement. I don't see that at all. But there is support. There was this cup here. And so there was congestion down there around 2,800, I guess, and 2,850, somewhere in there. That would be basically your first level of support, strong support. I'm not saying that we're getting under 3,000. I don't know. The market knows more than anyone, and anyone that tells you different than that, you can believe them or not, but I've got over 40 plus years in this thing, and I've been humbled by the market many times thinking that I knew that it was going to stop or it was going to do whatever. I've learned a long time ago, I don't tell the market anything. I'm a very, very careful observer. So people that are in this, I'm selling some gold here. I don't see anything wrong with that. As long as you keep your core position. What are you going to move into? Fiat? Well, you could. I certainly wouldn't, trade gold for a T-bill personally. But, there might be something you want to buy or some debt you want to pay off, or you got a, 12% interest on a credit card or a second mortgage or, whatever. I'm not telling you what to do with your money. I'm just suggesting that you might be able to sell here near this top, and you might be able to buy back if you do, if you wanted to, at a lower price. No guarantees, of course. All right, so coming back to to the landing page, themorganreport.com. You look at the blog, and not a lot of new stuff on here. I've been gone all week. I was in Portland, Oregon for most of the week. Got back Friday, making this update on a Saturday, actually. So there's a few things there, but I want to get back to the home page and go to our Twitter feed, because I did a lot of postings after I got home today. So if we go to my page, a few things, I'll run through these pretty quickly. This first one here was Kevin Melham talking about power problems with Eskom in South Africa. And I put it out that 70% of the world's platinum comes from South Africa. And I've addressed this many, many times about the vulnerability of South Africa from electrical issues, political issues, mining issues, labor issues, cost issues. So I'm just bringing that to everyone's attention. This is something that people have asked me about, so I decided to post it. And this is, you can read it for yourself from the White House. And the immediate measures to increase American mineral production. If you're interested, you can click that. This one is from Mining Weekly, reputable source. Investment in digital platinum, that means ETFs, is soaring. World Platinum Investment Council reports. You could click and read that article. You can only see like maybe 6 people have retweeted it. Platinum and palladium are not very well followed. Gold isn't all that well followed relative to the financial system at large, but gold is highly followed relative to, say, platinum, palladium, or even silver. I mean, gold has got 3 or 4 times the following that silver does, and probably 10 times or more what platinum, palladium. So regardless, this is something I'm always looking at, the e-waste. So if you're interested in e-waste, this is a posting I did today about e-waste. This one talks more about the platinum group metals and how the PGMs are consolidating. One here that maybe some people don't want to hear. I believe this is true from other sources other than this one I posted on the PV growth is expected to slow down in the following year or so. I know there's others out there that I respect that say differently. I'll just leave it. I won't say it's a coin toss. From what I've read, sources I have, I think this statement's true. I wouldn't have posted it. But sometimes I post things just for the record, just so that someone is saying something wrong, I'll have a record of it, and I could go back to it and say, wait a minute, you guys said this back, in May 2025 that solar was going to decrease by 10% or so and an increase by 20%. Come back and call them out. In that case, I'd be calling myself out too, but I'm willing to do that. This one's interesting. My friends at Money Metals talking about, what is copper telling us about silver. Pretty good article. Suggest you take a look at it. This one is about gold and silver bar and coin demand rose everywhere but in the U.S., pretty much. That's what that says. Oh, let's see here. Gold falls. That's the big news that I just went through, the way I see it. And this one I reposted from Squeaky Mouse. We're getting that coiling action here, and as you get that coil, it gets tighter and tighter and tighter. You can think of a coil like that getting tighter and tighter and tighter. You get over here, it's going to spring up or it's going to spring down, but it's going to have it with a lot of energy. And of course, the silver bulls are thinking it's going to spring to the top, and that's me. I think it will. All right, I did something for the first time, but I hit pause before I started recording further. I have never used Grok until just now. And so what I asked Grok, as you can see, is, are gold prices headed higher or lower for the summer? And I'm not going to read this whole thing to you. You could type in the exact same thing in Grok and probably get a different answer, but it should be similar to this one. So they're talking about the historical trends, and some analysts think it'll be 3,500 to 4,000 by the end of the year. And then the drivers, geopolitical uncertainty, central bank buying, monetary policy, and inflation, dollar weakness. I think we all know those. I won't read it. Technical analysts with support levels around 25.37 to 26.55. I don't know how it comes up with those numbers. Analysts note retracements of these levels could present buying opportunities with upside targets near 3,000 to 3,500. Sentiment on X, some posts reflect strong bullish sentiment with predictions of gold reaching 5,000 in the coming years, driven by central bank demand. Bearish case, recent corrections. In early May 2025, dropping so many grams, which is about 2,800 the ounce. And I already said that previously, not knowing what Grok was going to come up with. Dynamics, stronger dollar, reduced safe haven demand with the geopolitical ease and trade negotiations stabilizing. Speculative profit taking, that's definitely taking place on the trading side. Seasonal short-term pullbacks, silver and gold are almost always weak during the summer months. Not always, but almost always. The low in silver and gold historically has been in August. It's the old adage, sell in May and come back after Labor Day, which is in September. So that gives you that outlook. Risk of oversupply or policy shifts, potential sale of gold reserves by distressed nation, example, Russia or a hawkish Fed policy reversal could depress prices. Okay, we'll take that. Likely scenario, the balance of evidence leans toward gold prices trending higher over the summer. I disagree. I think they're going to go in a trading range over the summer, sideways at best, but definitely below 3,500. Not that we couldn't see 35, 50, or 60, but if you look at the trend of ups and downs, that squiggle, something like that silver chart I just showed you where it's a descending triangle, I think it'll be more of a channel formation up and down. Okay. Price range based on available data could trade between 3,100 and 37. I'll go along with that. It could get above 35 in the summer. Again, I think that I doubt it, but could. Key risk: a stronger dollar, profit taking, and reduced geopolitical tensions could cap gains or trigger temporary declines. 3,000, 3,200. Conclusion: gold is more likely to head higher for the summer. Again, I don't think it will. I think it'll be in that trading range, but market knows more than I do, or as I said before, as anyone else. Fed policy update, political developments we keep talking about. Disclaimer: this is for informational purposes only and is not investment advice. Gold markets are volatile, and price performance does not guarantee future results or past performance. Consult a financial advisor before making investment decisions. So I'm going to wrap it up there with this week's weekly perspective. This is David Morgan of themorganreport.com signing out.
The U.S. government debt is about to cross $37 trillion. That's not a typo. That's trillion with a T. Tariffs are being used to try and even the playing fields. Global supply chains are shifting. Inflation isn't going away. And the value of your dollar? It's quietly being drained while no one is really talking about this. The truth is, we're living through the early stages of a financial reset, whether anyone wants to admit it or not. And if you're still relying on mainstream headlines or financial advisors who just tell you to write it out, you could be blindsided when things really shift. That's where the Morgan Report comes in. For over 25 years, David Morgan has been helping investors cut through the noise. He tracks what actually drives markets, from precious metals and mining stocks to global debt and monetary policy, and show you how to protect and grow your wealth when the system is under stress. This isn't just about gold and silver. It's about having a clear-eyed view of where things are headed and making sure you're not caught off guard. The Morgan Report gives you real research, honest analysis, and strategies you can act on, even in a world of rising debt, unstable currencies, and economic uncertainty. Go to themorganreport.com today. Download your free report. Get informed, get ahead, and take back control of your financial future. Themorganreport.com. Because $37 trillion in debt won't fix itself.
And the stuff is also quite heavy, as you know.